All right, so we're coming into the Asian session, the beginning of the week. It's about 9:30, um, 5 here, something. Wait a second, my computer's. It's not letting me flip screens very well. Okay, we've got 9:38, so 8 minutes after the bottom of the hour. And I just wanted to run through what I think is the answer to risk management is a dollar amount that fits into your lifestyle that you'd understand. Uh, to feel comfortable with that amount of loss, um, possible loss per trade event or per week. So if you're in the camp of the no nonsense, low frequency daily entries, I was watching the Discord. I couldn't resist, and of course they wanted my phone number. I was like, geez, how much? So I didn't answer in there, but I was reading the Discord and the no nonsense, and that's quite a treat, especially the part about the baseline. Now, it's like, how many ways can you avoid reality? I don't know if this is some kind of millennial, like, soft cushion to reality. Like, put a moving average on it, dude. Like, take a look at my schedule. Hey, look at the path of my psycho babe that's out buying stuff she doesn't need. Let me put a moving average on that. You know what? Doesn't look so bad. I mean, yeah, she's buying stuff here and there, and certainly she's just leaving it laying behind, and it's just a momentary, you know, fickle thing. Like a bad trader. She's like a bad trader. Over trading, over buying stuff. Um, but yeah, I was just going to go through the charts here and just the most linear risk you can possibly imagine. Imagine risking $3 a trade. So a 25 pip stop, 5 pips for slippage. Um, like this entering the market because your C1 is switched up and your ATR is 1% of the last known coming of Christ or whatever the fuck this shit's based on. I don't know what people are thinking. All you have to do is look at any set of data and realize that if you're honestly trying to ride a move in these markets, price wise, the price fluctuation, and kind of make money with just because of the price, okay, timing it. And I think this is where people are saying, well, you're trying to time it, so therefore you're shooting at something that's moving, and how do you know it's not done moving? But if you're pricing the market in the auction market maker, bankers supposedly, people are saying, well, bankers are buying. Yeah, people without stops in the market would be accumulating because they could do it. But if you're running a really tight stop of 25 pips, there's only certain trades available to you that would make sense for the ratio you're trying to achieve. You put a 25 pip stop on, it limits your ability to make what supposedly and it's true because people with a lot of money have their money everywhere so that when one market tilts, the other one's probably taking up the slack. In a conventional wisdom, even those algorithms are bullshit because everything's in a different balance the next time around. There's no way you're back. No matter what you do, your lawn in your backyard, it's going to change, right? I guess you could keep it totally manicured, but you cannot control the market. So the market is a lawn that is out of control. It's got clover, now it's got this shit, then there's fucking, you got some weird, the lawnmower man's out there. That's the market. I really amazed that people want to put filters on it and ruin what it really is. I guess naked trading is feels insecure, right? Because nobody wants to be naked or nobody wants to deal with how bad the core of something is. So, you know, this is just a mess. And to try to explain it um, is one thing. You could explain it and say, well, can't you see the news here in the course? Then it was built into the news, and that caused this move, and you could go on and on. People have written books, about the market, but if you're trying to make money from the event of fluctuation of price, you've either got to be in something that's small enough that you don't feel like you're getting hurt financially, and you're like a stock trader trading it as yeah, you just bought $1,000 fucking position. I mean, and these guys that are doing these videos like you're in a 10-cent position, dude, you're in $10,000 of fucking currency. Who says that you're in a dollar position? A dollar? Um, this is a lot of fucking. I mean, yeah, stock market. There's no fucking leverage unless you got a broker that's gonna give you the leverage. The 50 to 1, yeah, you gotta fuck. That's the bitch of it. You gotta dial the size to whatever the leverage is and say, well, you got to trade with 10 grand now. You can't just trade with $1,000. You need 10 grand. It just takes you down to the level of commodities. Nobody was opening an account. You couldn't go past 35,000, 3,500. You had to have 5 grand in your account to trade retail for $30 round turn in commodities. So I don't think anything's really changed as far as execution. And I watched the Ryan Brown video, and the guys, he saw like, well, the broker won't let me. Yeah, I know the broker's not going to let you do that trade where you're piling in at the market. I mean, you just can't be going bam, 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 bam. You've got to let the server catch up to your EA, whatever he wrote. It looked to me like it was buying like a whore. I've seen people do these. Oh, well, it's going to chase, but it's going to get right in there. Yeah, they're just going to be say, dude, you're kidding. Plus, you probably went over the ticket. Something. I don't. You just can't. The turtle guy that's out there, or the guy that's, I've just been in this trade for a year and a half, and there's people that are making tons of money. They've been in the market for fucking 18 months on some fairly giant position because they got a lot of money. And there's people that are like, hey, I'm up 10 grand on this thing. I risked 2 grand. I'm up 10 grand. I'm in there 18 months. Buy and hold works. What the fuck are you talking about? But there's people that are like, well, if I even, so earlier today in the Discord, these people were saying, yeah, I back test this thing and only got 3 trades a year. I don't want to count on that for a living. And, maybe it's killing it on those 3 trades because it's cherry picked the data to the degree where it's just fucking insane. It's the holiest of grail bots that's so curve fitted that it pays off in that one moment in time. And it plays that song, One Moment in Time, actually when it hits. And then the Ryan Brown was saying, well, I don't want to trade over there because it's like a casino. Dude, I don't know what happened to this guy. should hook up with no nonsense. I don't know what he's talking about. And then he's like, how to build a system. It's just so cute. I don't even know what he's talking about. Then he said that these guys overseas were like, yeah, I'm going to get a record going of like about, I got like a good record going, like 3 months on this account. Check it out. I can't believe they haven't hired me. Really? That's not supposed to be like a 10-year back test, like to prove you haven't raped anybody. I mean, certainly there's got to be a background check. If they're letting you make you get a background check for guns, what about for a high leveraged account? They're like, hey man, you know what? We know you have money, but do you see how you trade? But it's funny because I feel bad for Ryan because he lost the Holy Grail, and that was the fact that he needed to make money to go to school to get coding, and he won on that trade. And it's like still going back to that robot trading for you. But I don't know. Maybe it works. Maybe the robots are killing it, and I'm just wasting my time thinking that you've really got to be aware of the volatility. Another thing these guys, I think, on this Discord are doing, they're using the ATR at 14, talking about the 1% increase that canceled the trade, and you chalk that off as a, hey, we didn't lose any money on that trade. Okay, that's great. That's great. But that's like the guy that says, I changed the oil in my car and I check the tires every month. You know, you're not trying to win a race. You're just trying to get groceries. I got it. You know, there's no offense to people that just want to go, you know, I got this thing. It's and then the defeatist attitude that Ryan Brown has now, where he turned the corner back to prop trading and saying, I'm just trying to make 2% a month, man. If I could just make 2% a month, I'd be very fine. So I don't know. And then he's, I don't know, but I don't get what people are trying to do there. Um, you know, you got to pick a team. You're either going to accept the fact that you have no fucking clue as if you're going to be exactly right. There's no fucking way. And you just forge into the future with a risk that is not painful at first. Of course, maybe it's painful at first, but you get used to that and you just chalk it up to. That's where the chalking up comes in, is you just say, I'm willing to take 5 trades a week. I trade a day. If this shows up, I only trade doji. So if I was going to be a beginner trader, I would say, and they had some beginner trader thing. You say, you know what? I'm just going to focus on breakout system. This is mechanical dumb shit stuff. It makes money. It's a lot of work. It's like you're sweeping a floor. You know, this not sexy to be a breakout trader. I'm just saying, but it makes good fucking money. It's mechanical trading dumb shit stuff where the market's barely moving. And this is where you're going to get ratios that are big enough to of course it's going to have to be pip based. You can't just say I'm going to do this trade and then figure out that later. You have to come in with your hardcore per bullet risk. So somebody said they're afraid of pulling the trigger. Well, how big is your gun? You have a bazooka? Like nobody's taking shots with a Stinger missile just trying to like, there's no like Gatling gun version of that. Right? There's no kind of way to, you can't rapid fire that, okay? There's no rapid fire to the that kind of system. So how do you do this thing? You know, people are saying this, that, oh, come to no nonsense. We take our trades at the end of the day. We're end of the day traders. Stop with the nonsense. Now, if your baseline is 100 period moving average, you're probably going to have, actually, based on your rule set, if as long the price is below this 100 period moving average, you're going to be taking every fucking sell you get your hands on. Then can you trade divergence, counter trend trade with divergence, and realize, okay, we're probably going to get we're going to get a bounce. You can gauge the size of that bounce. Would never try. The last thing I would do is look at a beautiful pattern and then figure out how much it's going to cost. I want to have the grid there all times to tell me, what are you thinking? Are you kidding me? Like, you're going to put a 25 pip stop on something here that's just, you're just like, really? The dude fucking 100, it's doing a 100 pip move every week. Right? It's the weekly Euro Swiss. Another thing is this problem about data destroying your setups. If you go back here, this is the depegging is going to come in, and one more zoom back. Also, where are you in the structure of the bigger pictures of the bigger picture, and which picture can you afford to be in? Look at this depegging here, man. Now, this is some harsh data. Now, just before that plunge on on the Euro Swiss. I guess you could say there was a little bit of a clue that it was coming to that kind of insanity was possible. Is look at this. This is, I guess it was pegged here. This is unusually low volatility here. You know, it makes me think that something could happen. And this first explosion here must have really blown people's minds after a year of nothing going on. This is 1 year every bracket here is a year. So here you come into the beginning of the year, everything's all tame, and then it just goes psycho spiko. And another amazingly, this is the classic ascending triangle we've all heard about in textbooks and what have you. Look how it shows up here in the most subtle. I mean, this is just wow. That thing is caught in a range of X here. I don't know what this is. It could be 1,000 pips, maybe. I don't know. I just got the 25 pip grid so compressed on there, so every one of these things is going to be the. But when we take this out, people are like, "Holy shit!" Some guy had a stop down here. Well, did they stop on him? That's quite a piece of data. And after this, did people come back in? It looks like a 618 there. Isn't this 618 of that? Oh, this probably. That's your classic 618. So, who steps in and buys this? And this has probably lasted only like about, some of the bottom part of that wick only lasted like a couple hours. It's pretty fierce. Then we actually make it to the scalper's floor and beyond. Like anybody that bought all the way down here, their first guaranteed target exit has to be this low. Then this is the other low to consider back in time. We finally hit that for a hard target, very hard target. Here's your high to break. This top does become a bottom, but see how this wedge and that wedge, and fractally speaking, you're talking about a market that's able to get very quiet and then wow. So kind of like a year and a half of consolidation, about 2 years of consolidation here, then holy shit. And where are people bailing on the floor of this triangle? Not everybody gets the price they want, though. And this is reminds me of that tunnel through the air thing. Gap up and just drift. Then people are trading that, making money. Is it worth riding that price pulse? And then you're really going to tell me, this is the weekly, that since this doesn't involve the dollar, this is a better currency to trade for your algorithm? And that's another just mind-boggling assumption. Look at all the way back to here. What a whack job market. And so I'm sure people either made tons of money on this move or they got clobbered. This is quite this is the first meltdown. 2010 was pretty vicious, but this one, wow, when it fell out of bed and it came into this hole, which we're living in the middle of that hole now, because still, even this, if this is the shoulder, if people think this is like an inverted head and shoulders or whatever people kind of surmise about these markets, this is a shoulder, this is a head. Is that your shoulder? So we're going to drift to here. You know, you're lucky to make it to here. All of this stuff here is never going to happen again on this currency pair for the rest of your life. I guarantee you this unique event in that amount of pips, I will guarantee you, as long as I'm alive, we're never going to see that exact same move. And we're probably never, ever going to see this whole construction here based on that pip, on that time frame, on this currency pair. For all we know, this thing's just going to be meandering like a piece of shit. Like okay, you tell me this isn't a downtrend. When do we go long? When does our baseline switch? I don't think that's the way to trade. Like, your baseline? This market has no baseline. It doesn't give a fuck about you. So, well, we're kind of like been going along pretty good in the relationship so far. I mean, I haven't wanted to kill you. Sure, you make that annoying sound, but God, your body's so nice. I mean, look at the chart. I looked at the chart. I mean, who doesn't want to get in on this? I don't know if that makes any sense. But I'm fascinated by the zoomage. I mean, you could get lost in these charts and never be able. There's the past ain't going to equal the future, is all I'm saying. And what are we doing now? I'm going to say you can't change the past. You can look back there and you can say, I remember when I thought I could trade forex and I bought right here. Right? Some guy did buy here. He came in and he goes, I'm getting in, man. I heard forex is the place to be. Besides, we're at support, don't forget. And then he said, I'll never trade forex again. But meanwhile, the market went through all these, I don't want to say predictable, but when the volatility calmed down and people felt like it was safe to come back in the water, don't forget, this blew people's minds. This is a forex, a nightmare if you don't have, like I was running a demo at El Pari, and it was like under 20, it was 20 grand negative. They didn't take people out. Their servers were so slow and they take nobody out of that. When this thing comes, so where's the safest place to get in on this chart? Where do you think if your baseline is the 100 period moving average, let's just pick that good old 100 period smooth moving average. Can you honestly tell me that you would have got in here because your baseline and your ATR, of course, what did this do to your ATR? And of course, is this too much? 1% of 14 period? Why 14 period? Why an arbitrary? I seriously hope these people are not using a 14 period RSI. I mean, a 14 period ATR. Like, really? Like, come on. How about just the true range of last month? The last 5 months. In the structure that you're living at, I mean, where does this stuff fall in the landscape of every price that's ever happened in the last whatever? Right? What is the rate of change per month and all those numbers? And if you're going to approach it with a hard trade plan, which this whole thing's based on, is saying, I have a 100 pip stop, what can I trade? I'll risk $10 a trade, what do you got? There's going to be something that's going to move, and 100 pips may be a little too liberal, maybe 50 pip stop. Then you can trade twice as much, see? So you're not changing your risk, you're making more work. but you're reducing your risk. Now people say, well, at what point? Yeah, at a certain point, if you're running a 3-pip stop and the broker's giving you 1-pip spread, commissions included, you really better be good at trading, because you're so close to the price of shipping and handling of that object you're trying to trade to make money off it. By the time you get done, you're just spinning your wheels, as they would say. And so, yeah, if you're over trader, like if you're just out of your mind, sure, no nonsense is gonna undertrade the account, right? You're gonna be safe there. Okay, what else? This is the same chart. I zoomed to the 1 hour, believe it or not. So, and time frame does matter. So from the weekly to the 1 hour, quite a mind bender. Now go to weekly to the daily, and this is where, it's just so hard, unless you do have a hard pip stop and just trade 1Ks, because it's $1,000. It really is. It's not a penny. You're not in a penny trade. You're in $1,000. So at least that's what we say over here. It's how you perceive this and what you would risk. Now, here we are in the daily chart. We have the 25 pip grid. And what could we trade here with a 50 pip stop? I could put up a 50 pip grid, or we can just count 2 grid handles. And so you would build, say, a 35 pip stop looks like this. And you would just say, well, I'm going to go like this. Oh, I've got to kind of like delete these objects, I think. No, I can do it. Okay, so I'm just going to throw in, I know this is 25 pips, and if I drag it like this and I come back and edit this rectangle, it'll start telling me how many pips it actually is, 38.4. And it'll tell me how long that lasts. Another thing is, how long does this trade plan exist in the future? Now, let me get liberal, and I'm going to trade with a 50 pip stop, so it's going to be 2 handles, and I'm going to let the order last all month. This daily chart, so we've got about 28 trading days here, and I also don't understand. This just blows my mind that the no-nonsense guy will not range trade when 80% of the market's ranging. I don't get it. Just range trade it. Now, waiting to get filled is a whole other story, and you can see people are impatient when they say, oh, well, then I have to wait. Like, what if the ATAR's up and the switch is down, and then I know, well, I'm waiting for indicators to catch up. You can only see how this ends up being. It's like, okay, yeah, well, she's a little bit young, but, her family is dead, but she is on drugs. Okay, so do we take the trade? Yeah, I say go. I say it's a go. At least till she blows herself up. Here's the 1 hour chart. Now, this is like a lot of fucking work. Like, you're on the 1 hour chart, dude, I'm buying this with a tight stop. I'm doing hedges right now, like crazy in Asia. Right now, I'm going long and short at the market, tight stops, or I'm going to go totally long. I think we could easily make it to here, this wick, and this controversial price by maybe Europe Open. Maybe not. Maybe I put the hedge on here and I just bracket it, so I would put on this trade plan. At the same time, I have maybe sell limits up there. Now, you got to figure, if this is 25 pips and the broker's going to give me a tight spread, what is the frequency of trading that I can match the market? And this is why it's very difficult you can have a consistent trade plan, but to consistently make money, you're relying on the market to give you the volatility that's going to fulfill that trade plan. And it may fulfill it faster than you've allotted for it. You've got a pending order that lasts all month. You might get filled in the first hour of next week, or you may take to the end of the week to get filled on that ticket, but that's a good price, irregardless of the divergences that are going on. Now, divergence may be happening simultaneously with the end of an auction because you're running out of momentum. There's nobody left. You've washed out everybody at that price. Like when the Swiss franc depegged, okay, it didn't go to zero. I don't know if people realize it didn't go to zero, but they act like it went to zero because they lost. They're like, oh man, that's dangerous. Like that could, the thing bottomed out. Okay, but it recovered, and everybody knew it was propped up by a rule. So this rule-based system that this, the rules, and that's another thing that's just always triggered me is this rule. Okay, you have a rule, but you've got many rules. You don't have one rule for your life. You've got all sorts of sub-rules. And you've got if you're going to scalp the market, if you're going to trade this thing because you're looking at the 1 hour chart, you're like, oh yeah, okay, just keep buying. I'm on the 5. I'm building a position. Look at the 5. Look at the 1 hour. Look at the 15. It's a whole different kind of trading than the no nonsense guy, I'm assuming, because he's end of the day trader, kind of casual. Some guy in the Discord said, what about, I want to go home and have a beer, but I kind of want to cheat on my wife, and I'm just kidding. And should I check in? Is there another way to get to my platform? I'm kind of a casual trader. Don't really want to, go home and like nerd out with my chart. I don't know. Got this nice piece of ass here. I think I would just like to. Is there a way I can just trade off of my phone? Yeah, trade the monthly chart, sir. I've got a solution for you. Now look at the monthly. I'm still utterly fascinated with the depegging of the Swiss franc. Look at the monthly chart, and you're like, huh, that doesn't look so bad. What the fuck are people talking about? No, but if you were here on this day, on this moment, and there's no yearly chart, unfortunately. Maybe there's a way to synthetically make one. But we got a whole lot of doji. Now, if there was a robot that you ever built, it would have been the 5 doji bot. The 5 monthly doji bot. Like, there's something seriously wrong with the market that's not going anywhere. But it's about to go somewhere. So just to finish off my mechanical system, one of the systems is mechanical trading. You got to have it in your toolbox, because this is like changing a tire for some hot babe. You got to know how to change a tire. You're like that Beto guy. Is he rehearsing when he cheats on his wife? What the fuck happened to this guy? But if ever there was a breakout trade, non-directionally speaking, don't forget, this is the ultimate winning trade from a. There is really barely a fill to the north side here. In fact, the whole time this pattern's forming, it's like, wow, I'm not getting filled on confirmation breakouts to the north side. Hello? But meanwhile, I've got all this fucking bullshit, like stop stacking up. Don't forget, a lot of people must have stops here protecting, like, and it's going to be banks and whoever. Doesn't matter. It's got to be a fucking pant load. Now, does this look anything like a penny stock to you? Like, oh, but that forex, it's just so brutal. It's just so brutal. Look at this one. Now, that's a nice launching of a beautiful, smooth trend. But are people fond of this move? Who was short into that? Did everybody get killed? What about the hedge funds? Fuck, they were like, dude, we've had a hedge on. Whichever way she goes. But that was harsh. That phase of it, the down move, like 4 hours, boom. Not even, I can't zoom in from this level, but it's like, you can't imagine. And at this point, I think it was probably going to gap. Once you hit this, you're like, oh, well, that's a lot of pips. So volatility, it does matter. Breakout trading works. Um, did you have your target set down to here? I doubt anybody wrote a fucking 5-month doji bot with targets down here. If there's one guy out there, trust me, he's going to think he didn't trade that trade big enough. Guaranteed. Another thing is, there's always an opportunity coming up. So it's only Sunday. If you were to say, I will sell anything that is on the top side, and if I can find a pocket of vacuum, and I place sell limits up, say here, this is not realistic here, this is monthly chart, but say I'm going to sell up in here, put some scalps in there to take care of the first, the battle I perceive will happen here. Even here, I'm putting in a grid of tickets, various scenarios. Some are dead cat bounces, some are engulf. Now, also would mean that you would have to say you were going to stick around for the whole engulf. On the engulf tickets, let the scalpers do their scalps to the floor on one currency pair, on one broker, on one account. I mean, that's completely different than commingling all these strategies, and at the end of the week you say you're up, but are you really able to fine-tune the next event like that? And going from currency to currency at 28 pairs, you almost need to have this, what this no-nonsense guy is using is a big giant filter, because there's no fucking way. Well, maybe there is a way. There are people can do Rubik's Cube. I still don't get it. So there's people doing shit. And if you go to currency and do setups like that. So here I'm going to turn on my 25 pip grid to assess whether or not I can trade this. I go to the 4-hour chart. See, you know what? The broker going to let me trade this. I unfortunately left the spread out of this one, so we're just going to assume the spread's bad, 5 pips. So a 25 pip grid, can I trade the infamous, and it doesn't include the evil dollar that's manipulated? Like, you talk about manipulation. There's another thing I still don't understand. What is this guy talking about? Now, on the daily chart, is this being manipulated? Where is the trade that they're taking? Let me see here. How about I'll just do at a glance trading. I'll just assume that we're going up. Okay, so I buy. Where do I put my stop? Everybody knows this trick. Not everybody, I suppose, but we're just going to assume that we're going to trade with a 25 pip stop. So I'm going to trade the daily chart, and this is Sunday. And we closed down on Friday, so I'm just going to buy. It looks like we could go up. I'm just going to put a stop in here. 25 pips. Okay, move to the next currency pair. Now, how big is that ticket? Do I want to buy, after I get stopped out of here, do I want to buy here and here on the 25s? Yeah, I do. Because if I'm wrong about this, it doesn't mean I'll be wrong about this. The market doesn't know that I fucked up this earlier trade. So that's another thing. The market doesn't know you exist, which is kind of hard to believe. If you're losing money in the market, you would be offended maybe that somebody's taking advantage of you, because somebody's making money. If you're losing, it's a zero-sum game, therefore, right? But you got to figure you're in jail and you're going to get raped a few times. So you got to take a little bit of a prisoner mindset. That it's okay. You're not dead. You just got raped, but you're still alive. And maybe that's not a good analogy, but that way it kind of softens the blow of losing money. Blow. No offense. But so here's the deal. As you go from these 28 currency pairs that the guy claims he's trading, if you go to the Australian dollar, you're like, well, Jesus. On the daily chart here, this is not a lot of pips. You have to go to the weekly chart to even kind of get a feel of like, is this risky? Now this here is risky. Look at this. You decide to buy here. Okay, this is what another strategy. This is a completely different strategy than the mechanical breakout. So in a polarized view of the spectrum of trading, and of course there could be a mechanical version of a giant spike like that, where if it's just down 300 pips, you're pulling the trigger with a 500 pip stop. Like, this would mean that you have a trade plan for almost every situation that could possibly happen in the future, but realistically, you probably have a trade plan for the 4-hour chart that, if it's a breakout strategy, just a stupid 4-hour breakout strategy. Now, implementing that on 28 pairs, that's going to be, if it's all in one account and you get signals popping up, and you're supposed to trade everything that you see if you're a disciplined trader, and you built the algo and all that. You don't have a robot, so but yeah, if you're not getting enough fills, you have to drop down to the 4-hour chart. I mean, these people that are so strictly trading the daily chart, like the market's telling you, hey, look at the monthly. Like, holy shit, what the fuck? If you look at the monthly every month, you'll be looking at markets that you're like, I can't believe it keeps going. Like, what the fuck? So the monthly view is a completely different situation. And are you keeping that in context in the back of your mind while you're on the weekly and the daily? And are you trying to optimize your setup so much that it's not okay for you to be underwater by how many pips? Now look at this thing drifting down on the monthly. You'd say, oh, downtrend, only sell. I don't know. Are you going to wait this long to get paid? Australian dollar, just creeper here. The weekly. Okay, here's a dumb breakout strategy that you can claim that if you're waiting for a candle or a bar that is only under 100 pips, that you will put a stop. If the last bar was really big and now it went sideways, this is a flag setup. Okay, you don't need fucking 800 you could say, well, this is my flag, this is my pennant. I'm like, you can do with one bar. If this opened and closed here, it means the scalpers probably came in here, right? We know that the end of that story is, at some point we closed here, because you can see you opened here, you closed here. So you could call that a stop hunt, you could call that fresh liquidity, you could call that you dipped in the well, whatever you want to call that. Dark cloud cover, inverted dark cloud cover. I don't know what because maybe the bullish. I thought dark cloud cover was like this, where you slightly engulf the top of the candle. Like here, small body. Wow, you're just not going anywhere, man. So trade a volatility breakout system here. Non-directionally. You lose if you don't fill here. If it's a non-directional breakout strategy, buy stops, sell stops, you don't fill the sells. Non-directional. At the end of the week, the market hasn't gone anywhere. You're doing a fucking breakout strategy. On the weekly, bar by bar. What are you waiting for fucking this to rally into a 20? Okay, that's great. But some of us don't have that kind of time. We don't want to fucking, us old people, we want to trade and make money. Or even young people, they want to trade and make money. If this is supposed to be support, this is support, and this thing stalls out here, even if you don't see this giant hole, or the fact that this isn't this, if this is a breakout pullback confirmation on the weekly or the daily, sorry, this is the weekly, on the daily, and you say, oh, look at structurally it's sound, and look at this giant abyss that we could probe. And what if you have a trade plan for at the end of the week? If we're really down, I'm buying on a Friday. How'd that trade work out? Pretty fucking good, right? Because it's down so fucking hard at the end of the week. Now here's where you'd say, I tried the same trade. I did what you said. I bought when it's really down. I put a stop in at 25 pips, and oh my god, dude, I made like 100 pips with a 25 pip stop in 2 weeks. And I did it again, and they stopped me out, but damn, I would have made more money on that price pulse, on that dumb shit trade plan of buying new lows. You had your breakout trade plan here, so people, they say, what? I don't get your strategy. It's a dual strategy. You have to have a breakout trade. You have to have these goober trades. You got to lock down, oh, doji. And as you break out this, so if you have a buy stop, sell stop, sell stop, I think you got trapped here. You don't want to buy on the weekly this. You want to get in, right? The people say go to a lower time frame. No, just go to the close. Right? Just say, I mean, sure, you're going to go to a lower time frame, but I'm saying on the monthly, on the weekly, this could be a monthly. On the weekly, at the end of the week, you're like, holy shit. This triangle is happening at the apex of this triangle, right? There's a triangle here, and there's a hyper triangle. So it's stacked up fractals. Here is your trend trade. It's big down. Wait till it calms down. We'll get in with a buy stop and a sell stop on the weekly. We've got a small bar. Good trade, Jethro, until here comes the end of the week guys that are like, you mean to tell me that this thing just cleaned house down into new lows? The bankers are gobbling that up because they don't use stops. If you want to see the bank trader, suppose Nick the Trader. I watch Nick the Trader, and I'm like, okay, dude, yes. But also, there are people that are swing trading it. It's called swing trading. Apparently, the banks are swing trading because they can afford 8,000 pip stop. They're in so many instruments so big they're barely in. But the retail people are in heavy because they have the leverage to be in heavy, and they per dollar they're able to really drive the account. Now here's another triangle set up here, and here is the smallest bar on the weekly. And this breakout, okay, a little bit of money. But when this happens, you still have to be aware of the people. You still have to be aware of this is a 1 month vacuum. So 4 bars here I'm going to say is a month. So here's also a big, this is a subtle situation here. You fill that, and it's breaking out on the monthly, and people are like, oh boy, here we go again. We're going up. Don't forget, some people's view is that the trend is kind of, this is, the old fishbowl pattern. But it's unique to everybody, and this is unfolding into the future now. There'll be never the same loss. You will never lose the same amount on the same day in the same time frame into the future. There is no consistency in the markets other than we do know Asia's quiet, and when all markets are open across the world overlapping, and when the Dow Jones opens at 9:30 Eastern Standard Time, the circus begins. Now here's when it's ultimate like execution. People are either getting stop hunted, which is fueling the move, or people are jumping, or people the aha moment of the mob, or just the pure fact that the orders have stacked up, and the dominoes will fall, and they may be stop entry. And another thing is that I'm watching this other guy talk about, well, they're manipulating the market here. They need to get orders in and stopping you and stopping out. There's people that are getting in on a stop, and they're going right into a good, like they're going in that direction. They're getting in on a stop. They're not being hunted. They're hoping the hunt continues. Everybody's in here for a different agenda, a different motivation. Certainly, the distortion that would take place is if you look at the monthlies and weeklies and say, oh man, look at this fucking thing, but you can't afford the banker's stop, so to speak, the giant wide stop, then it's tough, right? And it looks like, well, this doesn't even look like it's fun to trade here. I mean, it's just like dripping down here. I don't see the spikes. I like to see the drama. Now, here's the daily Australian dollar. And on this particular time frame, to me, it's a total fucking buy. Plus, it's down on the weekly really hard, and I like it down hard on the weekly. It's a deep discount. So I'm not saying that it can't keep going down, but why would you ignore this obvious dumb shit trade? Also, you have the classic top become a bottom structurally speaking. Here you've got well, you kind of went underneath it. And you could still lose on this trade, don't forget. You could make the argument that this top became a bottom here. This top from way back here. Just trying to be as simple as possible. Just be clean look at reality here. We don't have any type of moving average. On the 4 hour, it looks delicious. Like, holy shit, I would have had limits. And of course, this double bottom is where I get in, and now I'm cashing out right now on the scalps. So that's a 25. That's a 10 pip winner with a 25 pip stop there. So now you're talking about when you trade the 4 hour chart, you're going to be trading like, whatever the market's telling you to do. And here having a 4 hour doji bot would have done very well. Here we also have the classic hammer. This textbook setup here. The wick is in the auction window, which is everything below here. You close with a hammer. Get the fuck in that trade. That's the classicest, the most classic it gets. Another one is just any pullback here. We'll go long, go long, go long, go long. Here's where you get killed. You start buying all these pullbacks. And now you've tied up margin in here. This is the last phase. Distribution's taking place. Now the no-nonsense people are hoping to pick up maybe this. Because they would never trade reversals. No-nonsense does not trade. He doesn't buy down here. Not going to happen. He also doesn't buy support. If he does buy this, it's only because, well, it's a pullback into his baseline from here. But he's not, I guarantee you, he's not looking at this obvious hole or even this shallow hole here. So here's the same situation. This vacuum is a mini vac. All of the robots that get trapped long, lower highs, first breakout, trap a breakout trader, trap along, breakout trader, trap along, breakout trader. But the non-directional traders are cleaning up because they don't give a shit. Two dojis, they put a buy stop, a sell stop. They're short. They're short by default. They're short here. This is a gravestone that wicks into the market maker window, liquidity window. The robot that gets on that, also the other robots are getting on. So you have like, say, 10 bots. There's a bot that trades really big when it sees this, but that's such a rare event. He trades heavy on this stuff. These gravestones, dragonflies, he's in heavy. Here too. When he gets this kind of like, this 4-hour chart, don't forget, so you've really got to be building and scalping in here, because the final conclusion of this, even if you've trapped some long bots and some short bots, what is the resolve of this? Is this accumulation distribution? You're going to let the market decide, and the market's going to prove you right. And this is, you're using multiple layers of the concept of let the market prove you right. Alexander Elder, because you're saying, I don't know. I'm going to go with this confusion. Buy, sell, buy, sell. This is plan your trade, trade your plan. You're trading a breakout strategy. It finally breaks down. It doesn't mean you can't also be aware of what's going on here in a non-mechanical. This is pure mechanical trading. This is, wow, look at this fucking void left behind. What in the fuck? Is that going to fill? If this is the first fill as you smash into this, so Australian dollar 1 hour, I'm sorry, 4 hour. It looks like it's 4 hour chart. And this is 1 week from here to here. So without trying to deny reality with indicators, just look at this classic situation. This void is forming. It's a big fucking deal. It fills. The scalpers get the fuck out. We have the, I guess this is an algorithm, the doji rhythm. The doji bot comes in. He makes money on that move. He makes money on that move. Inside of that, this is the doji of the week. There's a big body here. The market hasn't gone anywhere. It's about to go somewhere. Are you okay waiting for that to happen? Are you waiting for this bottom to become a top here? Because this setup, you're not going to jump in here in the first one. You're waiting for confirmation to come back to structure. Okay, all that's true. So there's all sorts of stuff going on here that has nothing to do with finding the optimal settings for any indicator, because the market in the raw sense is setting itself and resetting itself all the time. We expect sellers to come in here. The scalpers are already out of this. It's only Sunday night. You got a whole week ahead of you to blow up your account. And I recommend you blow up a demo account so this doesn't bother you. And see that, what if I just place buy limits here in a no stops demo, just right mouse click. So if you don't want to go into all this script bullshit, you just right mouse click, buy limit, right? Do you want to place it? Yes. Do you want to put a stop? No. Okay. You got a buy limit pending down here. You're trading. Now, in a sense, this is pulling the trigger, but it's more like setting a mine or a trap that has liability to you if you don't want to chase it here, or you're going to put a sell limit here. And if you right mouse click, sell limit is the next choice. Place the order. There you go. Now you can move that around. You can put a stop on it. But now, well, okay, shouldn't I put, maybe you should put 10 in there, because the first time we clip this one, there'll probably be a reaction in this window here. In this battleground of 25 pips, you're going to have to take your 10, your 12, your 14, your 19 pips, and you're going to have to take that off the table, because unless you're willing to sit through all of this drama here, right? Unless you don't have a trade plan for this kind of situation, I think this is what makes it so difficult, because people they don't want to see that when they just made so much money on this fucking entry here. This clean, dumb shit setup that even on the line chart is like pure gold, where you have a top become a bottom, right? And this is noise to people all day long, even though you can see here the classic breakout pullback game. And where's fair value in this? I can't get these drawing tools. Okay, so here's your top. And it becomes a bottom later on there. You draw your trend lines here. You're looking for breakout of volatility in the trend line. The trend line here breaks out. Comes back, finds support. One more launch. Trend traders coming in. And if you do trend line on close, it's going to be easy to watch this. As you drag the trend line out, you're like, okay, well, it's not trending as fast. That's when my trend line's starting to turn. And finally, you break the trend line, you come back through, you break out, you find this is resistance. You could have made the same argument back here, in a sense. I mean, not as cleanly. It doesn't look as perfect. And another bottom becomes a top. As you pivot off of this giant swing low, you're just arcing out into, spilling into this hole. This is all happening. People can make all of these arguments for, well, this is the first swing failure, this is the downtrend, and people's moving averages are turning over at the same time I'm manually drawing trend lines and close. Sure. This support, it keeps, if you're buying at the market, every time it comes into this window, you're buying at this trend line. Yes, this is not going to be, it failed in the end. But for who? For the people that said, well, I could feed off that, but it's getting fragile. It's the volatility is drying up, which is causing the triangle to form in the first place. And what is sustainable as far as trend goes? Now this is another new trend line. So on the downside, you're drawing them like this. Is this sustainable? Okay, we're about to break that trend line. So I want to get in for my scalp on the first break of that. So I'm really pushing it hard. Like here, breakout, pullback. I'm buying that one. That's how if I'm going to do trend lines, I'm going to use them really hard and say, oh no. And I'm also going to say, I think this is a bottom. How do I know that's a bottom? Because after that it went up. That's a confirmed bottom. I'm going to buy that bounce. I'm going to buy support there. So when I buy support here and I don't get the bounce I want, this is where I have to come in with my hedge mechanical system. This doji here, this small body hammer, I'm going to call it a doji even though it's technically a hammer. This is more like a spinning top here, or this is like a very hard deal. This interplay here of people trading back and forth in a window that's the clearing window of price, everybody's still aware of this. This doesn't go unseen, this vacuum. Neither does this one here that doesn't get filled. And this being in the future, this may be the territory that comes flooding back into. So in the daily chart, when you go to you do all that analysis on the 4 hour and you go to the daily, you're like, holy shit, man. Like, fucking A. I mean, what the fuck? So this is another problem is trying to go to time frames that, you kind of come up with a 4-hour trade plan. And you really got to zoom in and be honest and say, oh, does that even look like, what the fuck is that now? Yeah, I see now. In this situation, you have to be like, yeah, don't forget your trade plan was in here. You saw 2 dojis, so you have a trade plan for this, and hopefully you cashed out of that. Now, as it's unfolding in front of you, for real trading, you had to put a hedge on here tonight. I'm sorry, on Friday, you had to buy below here on limits. I'm just saying. Now the spread you can see here is really not that great. It's like 3 pips here on this broker. And you're buying this, and you were up on that trade. You are really kind of underwater right now in this one. Now, if this is the one you're holding in anticipation that you're going to take off this, knock this out, shear that off, shear this off, shear that off, and just keep crushing the rest of the week north. This is the most bullish scenario. Or are you just happy to scalp to here and go back to sleep and then put limits in deeper for a possible and probable, but it's not even, it's like kind of like, it's an if-then statement of if you buy low, how far apart are your orders and how big are they to buy low without knowing how low is low, which you don't have to know that. So you don't need to know where the market's going to make money. Very disturbing concept, but it's true. Do not need to know where the market's going to make money, because right here you'd be up on this trade. If you placed over and over buy stops and bracketed a small 4-hour bar, and what do you consider small? It's going to have to be, well, based on what you can afford and what you think. Now this market's pretty tame. So you may have to trade twice as big here, but it allows you to trade closer together tickets. So you trade this completely different than you would trade the euro versus the yen, because you wouldn't be able to do that kind of trade plan there. And that's another thing I think this really freaks people out, is that these can look like amazing setups on certain instruments, and you go to the next instrument, you're like, no, it's too much gain. Sorry, wrong scale. Strings don't go like that. Doesn't sound good. Doesn't work on that, So your trade is invisible. I mean, you wouldn't even think about taking this trade on the monthly like that. You got to sell limit up here and a buy limit down there. Are you fucking nuts? What are you doing? Oops, hit the wrong key there. I'm trying to zoom in. I used the wrong zoom. I'm trying to zoom in, but that's the max zoom, and that's not a problem. MetaTrader, I can't really zoom in unless you change the, which I think I did change to 720 here on this. Speaking of the euro to the yen, and this is the 4-hour chart, you can see here these beautiful dojis stacking up here. Now, if the robots start to glom onto this, the mechanical breakout trading strategy, which is a viable strategy, breakout trading does work. It depends what breakout you're talking about. If you're looking for the breakout of this, no, do not trade that necessarily. If you're looking for this breakout entry, and I mean people are waiting for, this is another thing to consider, people are thinking about a setup in here. I saw it on the Discord. The guy's like, well, the ATR is at X. Is it in the real-time moment of the ATR being at this and that is at that, and that switches that, and it's okay to that because the baseline's here and my indicator's flashing on, but the ATR for the last period is better than the ATR of this period. Should I take the trade? Wow. With all the work that you're putting into that and expecting to backtest that across 8 pairs and come up with a fucking algo, maybe you want to do that. But I'm going to tell you, you're wasting your time. It's like the liberals with the fucking news trying to impeach Trump. You're wasting your time. You may enjoy that endeavor, but you could be putting on a perfectly valid trade. All this back testing you're doing, you're just wasting your time, honestly. in the sense of that kind of back testing. Now, I do have a back tester that back tests actual trade plans. It's completely different than it's got a blue flash, but my ATR says I'm within. The guy literally wrote on there, what if I'm 1 pip off? I'm at 80, but if it says 79, should I take the trade? Dude, don't kill yourself. It's not like that. She's like, I don't know, she's got fake boobs, but man, the rest. Okay, well, you can have the fake boobs removed. Just take the trade. It's going to be okay. I don't get this insane dialing in. What if we're wrong? Oh my God, dude, you should not be trading. I'm going to say if you think that that could be a problem if you're wrong or you lose money, it'd be like if you said, I'm going to buy a new car, but I hate scratches and I hate wear and tear. Maybe just don't buy the car because you're going to buy it, park it in the garage. Look, we haven't lost any money on this car. It's an investment then, right? So the carefulness that people put into trading, investing seems like, well, this is going to make money. Where trading seems like a casino. This is why the Ryan Brown guy, dude, you got to seriously grow or rent testicles. Dude, it's trading. It's not like, yeah, you built this algo that it only risked, okay, but now you're going to be disappointed it's not making enough money. And yes, there are people making a ton of money and blowing up other accounts. If you're making enough money, though, to buy the stuff you need to buy, then you realize trading's work, and you're like, you know what, I'm okay. The frequency of trading matches my lifestyle. I can't, if you wanted to be trading 28 pairs and the 5-minute charts on each pair, you're going to need to have like the screens that this Wayne McDonald's got, like 20 screens behind him. You need a staff of people staring at these fuckers. You can't stare. I've tried to do it. Like, I got 2 screens up. I'm like, can't do it. I can only focus on one thing at a time. Now, you think you can do it because you can buy 20 screens, you think that you can real-time assess them all. And don't you want to assess them real-time? I mean, who wants to be late on the trade? So if you're scalping mindset, and once you learn how to scalp, you're like, okay, well, maybe I should just scalp. And then you're like, oh, God, this market. And then you think, my algo's so good on the fucking dollar yen, let me take it over to the fucking euro yen. But you don't adjust for pip, the violence of the pips. Your ATR is this, okay, that. Then you got to adjust because of the yen. The ATR is a little distorted. That's why 1 or 2 pairs, maybe you'll be able to handle that. Maybe you are trading 28 pairs with some hyper filtered. Go for it. I'm just saying, for me, and for the fact that what's realistic and what can I do mechanically that's so stupid that it makes money. Look at this 4-hour rate here. Now, what would you say about this entry here? You've got orders sitting in here. You revisit the apex of that triangle or that doji scheme. You've rated here. I've bought every 25 pips down in here. I've got a stop down here and a stop here and a stop here. And I'm up. Here I'm long. I'm cashed. The scalpers are getting out right now tonight on the 4-hour. And maybe we plunge more. Okay, I'm buying down here. Simple. What's your strategy? Buy low. Sell high. It's the size you're doing, the frequency of trading, and do you have a trade plan for these marching dojis? That's a 25 pip winner. Another entry, another 25, 30 pips. Another doji entry, another 25, and then more. Right? A 4-hour doji script on the fucking euro yen. It's worth it. It's making, look at these pips. You're putting a hedge. You're building a hedge. You keep pressing a button that puts a buy stop in and a sell stop in. I know, this is really fucking, it has to be the most boring fucking way to make money. I mean, it's just so stupid. Same thing here. Now, you could say here, I did the same thing and I only made this many pips. It didn't cascade down. But no, you're still running the other algo, which is breakout. Any bar under 25 pips on the euro yen. Now, the 25 pip grid is perfect for the euro yen on the 4-hour chart. It's a perfect fit. And you just trade that. When you go to the Australian dollar, you're going to have to trade with maybe a tighter stop, and maybe the spread's worse, and maybe you have to trade bigger, because for you to squeeze out of what you perceive a opportunity, and of course, don't forget, the no-nonsense approach is you built an algo template, you throw it on every fucking thing, and you run that. You sift the market through that. The amount of pips these things can move and the size that you're in, it's like you're doubling your size just by going to another currency pair. If you trade the guppy, I know people do trade the guppy and they probably like the amount of pips, but, for somebody that doesn't want to trade that large, you're picking the instrument that fits your hand, so to speak. You're not going to fucking play an upright bass if you can't handle the fucking action on the. You're not going to play a trumpet if you're fucking got you're on an iron lung. You're not going to play trumpet. So not everybody's able to do some of these pairs. Like the euro to the pound. It's a great breakout system on this thing. I was running the euro to pound breakout system because the broker's giving me a tight spread, and it works. 4-hour chart. Okay, it's going sideways here. We got an entry here. I can't think of a simpler trading plan. You see a doji, you put a buy stop and a sell stop. Now, hopefully, you got a small doji here. Let me turn on the grid. It's a very slow computer I'm using. So I have a template I wrote that just has a green 25 pip grid. So here I can see how much it costs me here to trade this on the 4-hour chart. So I'm looking for a candle wick to wick that is below 25 pips, and I'll put a hedge on. The thing is, you got to keep doing this, and you got to either have a robot do it, or you're going to wake up every 4 hours or check it. Look at this fucking gravestone here. Look at this amazing fucking stupid ass trade here. You have sell stop stacking up, buy stop stacking up. You fill on this one day near the end of the week, and look at the fucking profits, okay? And look at the ratio. You've got to stop here. You got to take profits down here. Now, does that happen all the time? No. But this is a good one here. This is actually better because look how fucking fast that thing rocketed out of here. I also saw a guy saying, don't get in here. What are you talking about? You got to get in when the market's dead. It's just obvious. It's dead. Get the fuck in. Now, this is your trend trade. Continuation. Does this look like the other chart? Exactly. Double bottom becomes a top. Completely different currency pair. 4-hour chart. All charts are the same. What's not the same is this. People are like, how do I make money? Run a mechanical trading system just to pay the rent. It works. The smaller the 4-hour bar, the bigger the trade. The tighter the stop. The tighter the target, though. If you see the volatility drying up like this, and the ATRs are calming down, you're only going to make 25 pips on that trade. The probability is very high that you will make your 25 pips. Very small doji, under 25 pips, you made your 25. These are high probability trades. But now maybe you're over trading. Here's a gravestone. Here's dojis here, trapped a little bit long. Finally, you make almost 50 pips from here to here if you get in on that one. Now, big signal. Another 50 pip winner on the 4-hour chart. More work, more money. Another breakout, 50 pips out of a doji. Another beautiful meltdown breakout. You can still have your buy limits in here on the 25 pip grid, and you can cash out this dead cat bounce. You can still have your buy limits here and make that trade. You don't have to just have, okay, so if you're going to be in the hedge, so I've added hedges to my system because the guy that said, I'll never forget the guy that said, why would you hedge the market? And I thought, really, why would you? Same reason you get car insurance is that, what if something goes terribly wrong? What if you're wrong? You think it's going to keep going up, and you think that this is the target. What if you put a hedge on it and go, I don't know? So I also noticed that the no-nonsense guy did a thing on chicks trading, girls, women, birds. They're trading the market. The thumbs down were incredible. A girl could trade a doji breakout system because she'd say, oh, look, it's going sideways. I put a hedge on for you, honey. Good work. You made money, honey. You're just so cute. Leave the limit trading to Mr. Manley here. I'm going to buy this plunge here and then cash out. See, that's how the bankers trade, baby. You know, your wife's doing these dumb shit, doji entries. Look at honey, hey, put another doji trade on for you. Like this. Okay? I made 25 pips tonight. Yeah, no shit. This is the people that are trading at the Pari. The Pari guys like, yeah, anybody can trade this shit, dude. But once you see a Gartley, once you see a fucking Inkamushu cloud, you're like, it's like taking people to the goddamn sex toy store, you know? Look at this, dude. You don't even have a girlfriend. Like, I know, look at all these toys. So, you gotta be careful. Man, there's a lot of rabbit holes, okay? I'm just saying. But this is work. The 4-hour chart, I mean, like every day, right? So I get the daily chart. Now, for the no-nonsense people, here's the answer. You go to the daily. And you look for a doji, and you just get the fuck in. Okay, this is the cure. If you're worried about your baseline and your this thing and your waistline and all that shit, just break out the daily chart. And for the love of fucking Pete, trade a goddamn doji, you no-nonsense scoobers. Stop with the fucking questions about if it's the ATR is plus 1% of your dick. It doesn't fucking matter. I can't take it. No, it's cute. I like watching it. But look at, come on, no-nonsense people. Get on the stick here. Let's say we're going to trade with wider stops because we're on the dailies. But what about the doji trade plan on the daily? Here's a nice 50 pip, under 50 pip daily wick. Beginning of the month. We put our buy stop in, we put our sell stop in, and oompa loompa, we're filled. Confirmation upon entry. We could also have traded this one, and I would recommend this as another thing, is that we have a buy stop here, a sell stop here, a buy stop here. We don't take any trades when the true range of each bar on the daily. I'm going to clean it up for anybody that is a no-nonsense disciple. And they ask me, well, what do you do? If you're a daily trader and you trade breakouts, you literally have to take the risk and say, I will trade with a 50 pip stop, and I trade 50 pip. At the end of the day, the range is 50 pips. That's my call to arms. I'm putting a buy stop and a sell stop. I'm not even going to look at the fucking 4-hour chart. I'm a true fucking disciple of confirmation entry. One clean entry. What the fuck do you have? The baseline and what in the fuck happened to you? What happened to you was you bought the moving average story. You bought that. Where do you ever see volatility show up in any of these? People rarely talk about volatility or talk about instrument to instrument volatility. Why they say, well, the guppy moves like a whore, and the Swiss franc's barely moving. But I got a great setup on the Swiss franc, and I built a fucking back-tested system for that. And Jesus Christ, I don't know, man. You just gotta wonder, but it's fascinating. Otherwise, I wouldn't be watching it and going, what the fuck? It's beautifully fascinating, or is what Kelly Clarkson says, I'm broken and it's beautiful. I'm confused and it's beautiful. I'm perplexed and I'm enjoying it. Also, we could look at this from a structure standpoint, which goes beyond mechanical trading, because a mechanical trader would just say, I see dojis, let's put on a hedge, I made 50 pips, no trade, no trade. The open to close would matter for an extra filter. So for one filter, you'd have what is the open to close rate? What is the total bar? A true breakout trader is looking at the bar, small bar, sell stop, we're winning, we're in the buyer's window, got to be careful. This is Euro Pound, by the way, and here is a call to arms, the doji. After, I would say, the bear stop hunt, if you didn't see that stop hunt, then, I don't know. If you're really going to lean into these fucking baselines and bullshit, maybe your baseline's here and you're supposed to be bullish, or maybe your baseline's here and you're bearish. Depends on the length of moving average you chose. And the market doesn't give a fuck about your moving average, because the future is going to be completely different than the past. I guarantee you. There's no other fucking way it's going to go. You're just kidding yourself. You're like these people. Like, oh, you're going to impeach Trump because what? He had a phone call with somebody. Dude, you got to wake up. Or you're not going to take the trade because the bankers are manipulating the market. Same fucking stupidity. Well, they can see my stops. I don't know. Yeah, are you really on that big a plan? Are you trading that big? Everybody, yeah, on that, maybe that one broker. Well, the broker's trading against you. I think most people are trading against themselves. I think most people, if you know how to trade with a 50 pip stop, I think you can say, well, I have a 10 pip spread. It doesn't matter if you have 50 pip stop. If you drive that kind of, if your car gets bad mileage and it's a luxury car, you kind of knew that going in, I hope. So don't be whining about the fucking the broker's not executing properly for me, and yeah, you're gonna lean on a robot. You got your algorithm, okay, that's fine. But the real story is the market's noisy. Look at the 1 hour euro to the pound. You got a trade plan for this? A lot of people don't, because they're not going to babysit this fucking thing. And now a robot could take advantage of 3 dojis, put on a hedge, scalps the breakout, it's done, it gets in another hedge. Okay, you going to trade like that? Most people aren't going to sit here and keep fucking pressing a button every time. Even though on this chart, it looks like a fucking gold mine, that strategy. It doesn't fit in your lifestyle. You put a hedge on here into Asia. Okay, you're trapped long, but you made it up on the south side. They stop hunted the low of the previous day. Did you buy in limits down there? You should have. They even retagged it. You could have got in here on a breakout system on a retest of coming back in. Is this the shoulder? Is this the head? Is this the shoulder? Yeah. Why not? Is there a Gartley there on the 15-minute chart? Sure, why not? I don't know what to say. I don't know if anything I said even helps, but look at this. Okay, imagine a robot. Now, this is when I would build a robot. Several robots are going to get in on this, because there's a robot that says, oh, I like this doji with a small bar, and then the other robot goes spinning top. Holy shit, I'm on that too. So both robots cash, and maybe they scalp their first 25. They're designed to make 25 and 50 pips. They're just very dialed in robots. And also you have a market bot that says anytime the market's down an hour, and anybody's free to have this trade plan. This is my holy grail system, is that you're down more than 25 pips an hour, buy at the market with a 50 pip stop. This one didn't qualify, this one did. Did it become a winner? Not till here. And was there another robot that came in with that same algo that said, I buy a little bit with a tight stop here, down, 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 big down. So it bought here, maybe it bought here. This one doesn't. This one's break even. This is why the market reverses here, is because this support becomes resistance, because people are getting out the revolving door. If you come back in with a hedge here, does this make up for the loss that you took when you bought here and had to wait till here to make money on that trade? In a 4-hour, robot saw this down and said, I'm buying that. Plus, you bought the new lows. So going from hedging systems to limit entry, market maker, banker accumulation, swing trading. Limits are designed for swing trading, and breakouts are designed for trend traders or uh, mechanical traders, because you're going to try to make that breakout. Now, could you have 1-hour charts and 28 robots scanning for yeah, you could. That is a viable way to make kind of money. That's not a lot, but I mean, it's high probability churning stuff. If you really want to clean up, it's going to be like, okay, you're sitting there on the weekly going, okay, man, like, I'm selling into this like you can't believe. I'm going to sell. You've told people I'm selling every 25 pips up into that, and they go, where's your target? And you say, well, my first target's here, my next target's here, and I got in so heavy you have no fucking idea. So if something's hunting and pecking away at the market, you have a robot that's going to hunt and peck and whatever this guy's got running on his robot, and it's just the market's too dynamic. I think that the problem is that it's too dynamic. It's coming at people, and it's constantly fluctuating, and it's fucking up their algo. And they back tested 5 years of data, 10 years of data. It did pretty good. I have to turn it off during the news. Then what's the point? Because a lot of the pips are made during the news. I mean, you have a news bot, I suppose, but you've got to think that when you get down to institutional trading and banks and stuff like that, you're talking about execution that has nothing to do with timing the market. It's just a price to them. They're like, oh yeah, this week it's down, let's buy some more. Nobody's sitting there with a 1-minute chart frantically scalping for the bank, I don't think. Maybe they are, I don't know. But I just don't think that's how money moves. Like this, another thing, the banks are, okay, so just to prove, and this is a proven fact, you think the banks are making all this money. I know people think that retail traders 95% lose and the banks make money. Does anybody see what's going on here? I don't know if I mentioned in the last video, but this is kind of spooky, and I'm not really in this conspiratorial shit, but anybody catch a view of what's going on here with the discount window in the banks? So the banks got their ass kicked in the S&P 500 sell-off, and all you have to do is go into the bank and talk to anybody that works there and see that if these people are trying to trade the market, like, we're all in trouble. Like, so they are. And JP Morgan lost more money than any. Now they're like, we're investment. Even the guy working there told me he's trading penny stocks and stuff as a kibitz. But hey, listen, he's probably doing better than the people that he works for, because they're so fucking head up their ass so bad. We got this analysis from a report room. We had a meeting this morning. We're thinking about doing this trade. And you can imagine people that work in there go, holy shit, right? So when I talk to people that work at these places, and all you have to do is work at any place. Just work inside of any structure where there's people that shouldn't be there, and people that are there because they've been there, so they got seniority. They don't know what the fuck they're doing, but they rely on this guy, and this is it. He seems to be okay. He's not blowing anything up yet. They just blew it up. So these fuckers blew it all up in the stock market, and now there's kind of like this liquidity problem with the banks. So. And I think when the bond market flipped upside down, a lot of these models, and this is another thing, this whole idea of, now, this is why robots that people sell, they sell updates to the robot, because the volatility is constantly changing, and you have to tune the robot constantly. Another thing with this Yang, I'm just going to go off on this Yang guy. What a fucking turd. Who is this idiot? Oh, you're gonna robots? Dude, you can't fucking, really? I mean, you outlawing cows and shit? Well, the algorithm in the robot, dude, the robots are fucking shit. They need more work. The funny thing is about people think they're saving something. Oh, I got Alexa answering, like, finding hookers for me. Dude, you're going to atrophy. You're losing your ability to fucking do shit. Oh, the new Windows iPhone. Oh, it takes pictures, but it's you're losing your contact with real shit. I mean, and now I sound like one of these tree hugging people, but I am. I mean, the thing is that I'm all about the robots. Let the robots go and let me go to the beach. I don't get why Yang's saying I can't build a robot. Well, the robots are taking over. Well, dude, learn how to build robots. Learn how to code. What the fuck is wrong with these people? This utopian shit. Anyways, it makes me sick. Because even in the trading world where we can build a robot, I mean, this has been this whole thing of, well, can I just get, yeah, if I knew how to build a robot, yeah, I would have the fucking 4-hour doji bot. Duh, that's a no-brainer mechanical trader. That's going to take dumb shit trades. Of course, I'm talking about multiple bots. I'm not talking about one bot. So I don't have somebody ask me, what's your strategy? Layers. Okay, you got to layer into shit. Nobody's getting married. Nobody's meeting a girl in 1 hour and fucking her and making a baby and getting married all in the same. Maybe they are. They're in Vegas. But you don't kill her after 4 hours. Okay, and say that was amazing. You do in the market, though. You're getting into a trade. It's psychologically disturbing. You're gonna get in a relationship for 4 hours, and you're gonna make money from that, and you're out. You're not investing. You're trading. But if you are investing, yeah, okay, you got your gold, and you're all happy. Gold's at 1,500. But are you gonna cash out at 1,500? Are you gonna ride it back to 1,200, 1,250? Are you going to give it to somebody in 10 years when it might be worth 500 or 5,000? Does that matter? Does it make you happy? The forex is 24 hours, so Sunday night when it opens, it's kind of like, hey, this week, if your outlook is what's going on this week, where could we go? Am I in something? Can I get in something before the market moves, or should I wait till the market moves to some place and get in there? The oldest argument is, do I do a Gartley entry with empowered trading and wait for them to come within 1 pip of my entry and miss it? Or do I get in something now and ride it to their 1 pip missed entry? Do I wait for my baseline? I have no baselines. I'm not going to trade the whole summer. Okay, granted, you didn't lose any money. You're an amazing trader compared to how you were strung out scalping at standard lots and losing $30 an hour. Granted, you're doing better than that. But I just warn people that you're going to reach a point where you realize that it's got to fit into your lifestyle, that if you back tested it. Okay, and even that guy that said, I don't know if I can make it to the platform today because, I'm out cheating on my wife. Am I a disciplined trader then? Or, I'm not following my plan. I built the algorithm. I back tested it. This other thing is, and I did do that. I've gotten good and bad results, but I would never trust that. I would trade that, and I'd also trade my idea. I wouldn't give everything over to the robot. So another thing I don't know if the Ryan Brown did was the robot's trading, but you're still trade demo the way you think it should go. Who's going to win? Are you better than a robot? Right? Are you better than a 5-year-old or whatever that? Are you better than a robot? Is there 5 different trades you could do on the same signal? Could you trade against conventional wisdom? Could you, when it's overbought, you keep buying? If overbought and oversold is blowing up your account, what if when it's overbought, you buy? And so I had an argument with this guy, Kelvin, and he said, look at every time it's overbought, buy. Yeah, until it does pull back. So everything's until. It's all wonderful until. And it's not for everybody. And this chart, this is live market right here. It looks like the market's not even open in this 4-hour chart. But I think the sellers just came in. So I would have scalped to here. I'm almost to the target here. And if I go to different time frames and people say, what about the 5-minute chart? Can you do a thing on the 1-minute chart? Okay, you could. But once you see the spread's going to be your enemy, then you're probably going to see it's untradeable from a realistic standpoint. Looks good on the bid, this pure bid here. Looks like great trades. But if you put a buy stop in, and you're going to put the buy stop in a true confirmation that's going to be like 5 pips away from current price, you're getting a late fill already. I don't know if that helps, but I go on all night. But the thing is, I don't know. I'm going to assume 118,000 people watching No Nonsense, that there are people in there that have never traded in their life. I'm not sure everybody in there is a seasoned trader that's already been through the mill, so to speak, of attempting to build the Holy Grail or anything close to that, the Unholy Grail. Here's the pound Swiss. You know, what the hell? What the hell's going on here, people? And, you know, once again, if you have a robot that can see these dojis, he loads up. Bam, he cleans up. Here's another small body entry doji. Another one here. Now here's where you're like, oh, getting a little chopped up and not making as much money. I don't have to back test this shit. I can see a doji. Jesus Christ. And that's another thing. Are you seriously going to tell me you need to back test? Well, I ran a back test. And, well, you know, the AT, you see, you wouldn't have gotten, but you would have missed out. Okay, the doji is a clean, you add anything to that. Like if you have really good pasta, are you adding to that? Maybe some oil and some cheese and some garlic, but once you add too much, maybe it's not fair because, well, really high-end something. Once you just, like if you have a diamond, you want a diamond that's clear and kind of big. So there's only so many diamonds that qualify. So if you look at that doji, it's a diamond entry. That's your flag, that's your thing, your breakout. And if you actually had a robot that was going to look at a body that was 3.5 pips as opposed to a body that was 8.5 pips, the one that's designed for the small body, they come in. So anything below a certain amount, the long-range target bots and the wide stop bots are in. So imagine 88K is on this 8-hour entry for this move here, and there's no other trade that takes place because, well, maybe this body, but the wick is too big for the other robots to come into. There is no, you cannot build a singularity bot. I just can't believe it. Unless it has a 300 pip stop. Now, I'm talking about these trades having very tight stops, and you're going to get a burst. You're going to make money on the burst, the breakout. As the market comes, and it doesn't even come here to fill, if you have a limit sitting here, you're not getting filled unless the spread's zero. In this kind of noise here, this is another noisy situation. Of course, it's if you have a robot that's getting in from a small body, it's making money, and it's a non-directional. These are all non-directional trades. They could be directional, but I'm saying pure non-directional. You do not have to know what's going to happen in a mechanical system. Now, for the Gartley traders and the Fibonacci people, they're like, oh, this is 618 down here. And they may be right. The market may probe into this area, and they'll say, well, you know, it's not exactly 618, but it's good enough. Don't you see? What the fuck's wrong with you? Why don't you trade Fibonacci? Okay, but maybe it's just filling this hole here. In the meantime, every bar has a signal on the 4-hour chart. You're also, the non-confirmation is too big a bar to trade a breakout strategy because my breakout has to be a small bar breakout. I only get in here and I make a little bit of money. I get in very big here because two small dojis like that, holy shit. Middle of the week, something's wow. Now, even if you don't look at this thing every 4 hours, maybe at the end of the day you're sitting here. And typically you are sitting in a doji at the end of the day. This is probably Asia. This is probably Asia. This is probably Asia. This is probably Asia. Now here you got a little trap there, but boy, you made up for it here, didn't you? Man, what a ride. 4-hour doji bot. You don't have to look at every 4 hours. That's why you'd kind of want a robot to do it, but you could be the bot. On the daily, it's a different story. Let me go daily. Not a lot of trades here. So, low frequency trading again. Doji's on the pound Swiss. Nice burst trade. No fill on the south side for the confirmation entry. Now this is another clean entry, a trade plan for a small body in the daily. You got even a structure, top become a bottom. Another clean entry on the daily. Clean scalp. Maybe this bar is too big. Wait for this one. This one. This is a good trade. Nice 75 pip winner there. Nice trade here, even though I guess you could say you missed out on this unless you've got the trade plan for the, or you got in on the trap here on the limits. And the daily, it's a different kind of thing. We're all hoping and praying that this becomes the raid area on the daily. But the daily chart's a different trade plan. 4-hour, that probably looks good too. You can still see this vacuum on the 4-hour. I'm pretty sure about that. Just knocked over my system here. So, anyways, yeah, it just goes on and on. Here, look at this spinning top entry for a nice clean plungeola. Jesus, look at that. Look at that entry there. Jesus. Yeah, the daily traders. Here's a nice another entry. Breakout. Breakdown. You've got to take that 25, 50, 75 pips. Your targets have to be streamed out, scaled out. There's no way. There's nothing. There's just no way. You can trade a rigid trade plan. Well, I'm risking 1% of my account. And just try it, man. There's plenty of robots out there that you should be able to tweak, and yeah, it'll make money on a certain currency and a certain time frame and a certain. It's not like people think. I don't know. Look how brutal this is to trade. Look at the doji stacking up here. Some kind of Brexit thing. Brexit. Oh, look at this one. So you get filled on the south side, no fills to the long side. Sure, you're getting trapped down here. But you got to come back in and do the same trade plan. Got to keep hitting it. Look at that look at this. Probably a flag in here or some shit. Then burst. Then you're out. I'm out. Or you sell at the market because it's up hard. Sell. Sell here. Sell here. This one's a winner. This one's break even. Sell. A little bit of a winner. Sell. 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 Why? Because it's up. It's up on the daily. You're selling. I bet this is like a classic losing trade for no nonsense. It goes up. He buys. ATR's just in a sweet spot. What? wah, wah. Yeah. You know, I really wasn't psychologically ready for this stop and reverse shit, but it's making more money. Um, Stop and reverse being you bracket this breakout trading. Like this is Bill Williams said, if you buy here, when this goes up and it doesn't go up, sell. And if your sell stops here, sell two here, sell two here, stops you out, you go short one. And I didn't think I could do it, but I wrote the script and I can do it. I can just put in a buy stop and a sell stop, buy stop, sell stop, whichever one gets filled. It's okay not to know where the market's going. It's great to make a market call and people say, oh my God. You could have a buy stop here like an idiot. But see how when we cleaned out these little treetops, we came back. But like even if you just did nothing, but when you're in a down day, you buy, up day you sell. With a 50 or 60 pip stop, and just run that on demo for the right currency pair that moves that amount. And you'd be like, God, this is so stupid. This is so dumb. I don't have a baseline. I don't have nothing. But if we're down 60 pips, I'll pull the trigger. Now, that is adding one criteria. If you're just down and you pull the trigger, you're down, we buy. You're up, we sell. And that's like really raw. I'm not even saying that you're up a certain amount or down a certain amount. So in the crudest sense, starting from you know nothing about markets, if somebody said buy low, sell high, and you say, you know what, it's down today again, are you going to buy? And somebody that doesn't know anything about trading, you could probably get them to put that trade on. Give them $2,000 and have them trade 1Ks and go, here, buy there. Every day it's down, keep buying. Don't buy if it's going up. Now, they may not be able to resist that. They're like, holy shit. I think it's going up. I was right about when I went against and I bought a pullback. The whole idea of it was funny because this guy in the Discord said, but I'm buying a pullback. Is it okay to break my rules on the baseline and my ATR? Wow. You just really are building a box of rules around yourself that you don't need to because the market doesn't have rules like that. The market is insane. You've got to have like dollar rules, time exposure rules. You got to have rules about how many trades you would take a day. Then maybe backward engineer to find a system that triggers so many trades per day. But in this instance, if you just went for the volatility breakout system, we just looked that up, or obviously you're just trying to this is based on the idea the market can't go sideways forever, which is proven fact. You will never see a market go in a 10 pip range for 100 years and without moving unless the market has been discontinued. They outlaw trading and they outlaw AR-14s and 16s. It's M16, I think. AR-28s. They got to come out with a different number. They just changed it. Although they're AR styled now. It's amazing. And yeah, I mean, this candlestick trading, and that was another thing. The no-nonsense guys, candlestick trading doesn't work. You just don't have a trade plan for the candlestick, that's all. It's not. Don't blame the candlestick. You don't have trade plans for candlesticks. I mean, it's obvious to me on the daily charts the trades that are available. Let's see what else I got in here. Australia CAD, another insane currency pair. 4-hour chart, a little easier to trade 4-hour chart because it's got more money on it. So I'm going to put my template on here. Change the time frame to activate the grid. So that's 25 pips. So with the 25 pip stop, what if we sold the Australian CAD 4-hour chart? We think this is resistance up here. And look how they just went. We would have got filled here perfectly on the, as Trump said, it was a perfect phone call. So right here on the tippy top, right, we would have got that perfect fill because we can see the bid there. That would have been amazing. And they tripped it once here, pulled it back, they tripped it there. Plus the breakout guys, we could be the breakout. We could trade our breakout strategy into our top, see? We trade both strategies. We have the breakout strategy running, breakout. When we see small bodies and small wicks, top to bottom wicks, small range per bar, no smoothing of ATR. These are true range bar system. We do see that we're engulfing just like we were on the Australian to the dollar. We're coming back to the floor here. This is the outlier. We bought this hole, this 25 pip hole. We actually had enough money to buy this low too. We bought more here because it's deeper vacuum, so that's our martingale entry, and this is the market maker cash out scalp target. But on the way to that, we did trade the breakouts of these into the hole. So into the vacuum, we did both. We are hedge traders here. Because we're down really hard in 4 hours, we buy at the market. Down here, we buy maybe a little bit, but because it's down small, we use a tighter stop. When it's down big, we use a wide stop. So market sells off hard, we use a wide stop. Sells off smaller, we have a tighter stop. We have to adapt to every bar that's coming at us. Up hard, we will sell at the end of 4 hours here. We'll probably cash out of our longs. We're probably cashing out. We would sell into this again for a pullback to here. And as this is going up, we're going to have our buy limits once again for the rest of the week down there. And that's just how it is. I can't imagine another way to do it because you're trading both people's trade plans. You should be making money from two strategies. What's your strategy? You can't have one. You can't have a strategy. So that's, I think, a big problem is people are trying to get the strategy. It just doesn't work. For if you really want to make money. Because this small bar here, there's a trade plan for that, and you're riding it. If you ride it, and even in your trailing stop, money management, you kind of got stopped out here. It depends how tight you trail that. So people want to use Akinashi for their trailing stop and avoid this little bit of a stop on here. But you're just, you are ignoring the fact that you're locking up margin for a drift move when you made so much here that if you didn't cash out into this window on something, yes, this is going to bother you. You're going to focus on that because you're in heavy. You didn't get out of anything on this first gust. And if you didn't buy this vacuum, right, there's where you got trapped on a doji. You kind of sell off there. But you made it up. You got two dojis here, two signals to go along. You cash out. You don't necessarily have to ride this. You can accumulate here for another blast. But I think you have to have a dynamic sizing. You got to trade what's going on. And so you're putting yourself into that risk pool by just, okay, so here I'm going to go to this account that's only up 50, only up $90. And here's a trade I placed. So an idea of how this would roll if you're going to pull the trigger on this stuff. I pulled the trigger here as evidenced by these arrows. This is the daily chart, 1 hour. This is a 100 pip handle. This is the 50. This is the 25. Different template. So you can just see that these expired unfilled. They never got triggered. So I know what happened here. I can see my cells never got filled, although I did put my cells in. These are the cells on the platform down here that say sell 2 hours, 1 hour north, 3 hours, 30 pips. So we're looking for a 30 pip move, 20 pip stop to make 20 pips. Not the greatest trade in the world. I built way more buys than sells. So on here you really can't tell. It looks like, oh, really close, you know. Here you can see I put them in before that plunge. So on the 4-hour chart, I'm trying to capture that, and that's just double click. Those are not, I don't think I dropped precision on drop on that. So this is a trading history. This is a journal, so to speak. Did I do what I was supposed to do? Would I have done the same thing here, and did I delete the objects without saving a picture of this is another thing to consider. So say you did hire somebody to trade for you. You said, I want you to put buy limits in here, and then they could prove, okay, there's no way to really fake this and put these in. Did you buy here? I told you to buy this plunge. I wanted you to buy this 50 pip range for me. And when we get down here, I want you to buy heavier tickets, and when you come down here, I want you to bet the ranch down here. But we never made it down here. Okay? I want you to sell above the 25-yard line, everything above here. Sell way more at the 50. Later on, that becomes a place where people definitely, they sell like crazy there. And this is the 4-hour chart. So now this is a different kind of chart because I know what a doji looks like. It looks like this. Small move is a doji. Small move. So I decided to have a line chart instead of candlesticks. I could still trade candlesticks if I had to. But I like this top becomes a bottom here. Top almost becomes a bottom there. I can see it's up. I see the range is small. I have my sell limit up here in the trap. Now it's just a different way of charting. I can see the double bottom cleanly here. I can see a retest of the double bottom and triple bottom in time. Double top. The triangle here. We're down now. They've trapped the breakout traders, I see. We could still come down here again. Should I cash out right now? Now that's the other thing, is should I override? And yes, you should override because you got to get out of some things. So I'm going to get out of this trade, and this is how you make money, is taking profits, not letting your profits run. So I'm going to cash out of this one. Whatever ones are winners, because we're coming into Asia and things are going to get crazy. I'm using $500 of margin. Now this I'm going to buy again. This is the dollar yen that I bought that I thought we were going to keep going up, and we didn't. So I bought the plunge into the close on Friday. I bought this plunge. Now I could have had a hedge on here. Dollar yen. Really nice trading because it has the dollar, the yen. This is high drama stuff. You can see here all these market orders I put in, and I put some limits in here also, looking for a pullback earlier. So we filled on that. Now I'm looking for it to go up again, so I'm going to buy at the market right now, and I'm just going to put in these kind of really shallow. I'm only looking to make 14 pips here. And this broker's going to give me a hard time here. There's just nobody trading right now, so not getting execution. Okay, I have to wait a little bit before I double click that, but here's my 50 pips stop to make 100 pips. Now I don't launch that very often because I'm not really planning on making 100 pips, but I'm more likely going to make 14 pips with a 12 pip stop. And that's my trade. I'm sticking to it, and here's a buy stop. 2 hour. Now I don't usually do this, but I'll do it here. Buy stop, 12 pip stop to make 22. 2 hour buy stop pending. Above, buy 2 pips there. Buy at the market. Buy at the market. I'm just going to buy more at the market here. 25 pips. Just going to get in way more tickets here, I think. It's costing me like $2 margin per ticket here. These are all 1Ks. Then I'm going to put in another plunge array here. So if we pull back in 8 hours here, I'll buy again. So I'm really bullish. The dailies look very bullish. We've had a pullback. I'm going to delete all objects now. If you save your history before you delete this, you can prove that you're following your plan. So this breakout here, I could have made 25 to 50 pips on this spill out of here, which I didn't. And I could have done that at the same time I was buying at the market as a plunge. So instead of having this all or nothing mentality, you're going to scale and scale out. You're really kind of always slightly long or short, I suppose, in a perfect world. Because if you would have traded this breakout here of these small bars and it plunges into the close on Friday, you cashed out. But then if you bought into that plunge, which I did because when we came to here, I knew I wanted to be long here for certain. When I saw it down really hard in 4 hours, I just kept buying. So at the end of the day, I bought right to the last minutes of the day. And some of that cashed out because I was pulling the trigger on these like make 25 pips and lose X. Now, would I put sell limits in here now? I don't know. I could do that. It looks like this for me. 30 pips above me for 3 hours. Sure. Why not sell? We're going up, right? Sell high. But I wouldn't get carried away on that. Depends how much I'm in. I'll be in a winning hedge if that happens. If the market comes drifting back and I'm still long on stuff that I bought really at a bad price earlier here. You can see way up high. But on the daily, it looks amazing. It looks like pure genius on the daily. See, look at that beautiful pullback. Now it looks kind of ridiculous to be selling into that on the daily because of that. Time frame just makes you think about, is that possible? Nice 2 days of pullback. Is it a 618 pullback? That's probably not going to happen for you on the daily. It might, it may, and this is where people say you got to have patience, but I don't have any patience, so I kind of know that. This is not a secret to me. But so here the weekly, right? One pullback, time to get in, right? So that's another thing to consider. All right, so that's all I'm thinking about at the moment. So let's see how this unfolds. I'm long dollar yen. I'm committed. I'm a committed long dollar yen here, hog long. So let's see what happens.